So our debt numbers will equal 54 plus 3 plus 711 plus 59 for a total debt of $827. Let's go ahead now and look at our DNA number. Our DNA number is going to be the following. DNA 478 rounded. Additions to property and equipment, $995 for CapEx, rounded as well. Let's go ahead.
If individuals understand that compliance officer training is basically civil law notary training with banking procedures, accounting procedures, and the tools of applicability, then it's taking those efforts as a compliance officer and making them applicable utilizing asymmetric information. Now, 99% of most individuals who have never been in this type of information have primarily been exposed to what we call symmetric information. So make the words public synonymous with symmetric information. Make the words private associate with the words asymmetric. So when we say asymmetric information, we're talking about private information. When we're talking about symmetric information, we're talking about public information. So that way the two will not get confused. So in dealing in those spaces of understanding public and private, asymmetric, and symmetric information, there are principles that must be applied. There are methodologies that must be applied. There are things that individuals can be doing to bring forth liquidity, but it's all about being in the right marketplace. If I'm in the lending business, I want to lend to individuals who can afford the product that I'm lending. And I want to make sure they're in a position where when I lend, I'm getting some equity. I don't want to just lend in hopes that you might pay. I want to make sure that when we agree to go in one direction, I have equity in case something happens. So, as a compliance officer, you're looking at this from that perspective. Is the individual in an equitable position to take advantage of what's being offered? If not, then how do I get them to that position? See, at the end of the week, the Fed now accounts implement, and those that are still in the public space are going to, in my opinion, be trapped by the symmetric information that they've been indoctrinated with. I know we had a couple of holidays. We had a holiday in this particular week. Yesterday I wasn't really able to kind of really push what I wanted to push because of the Memorial Day holiday. Hopefully you guys had a very good, eventful, day with your family, remembering the family and things of that sort. It's going to be kind of a really eventful week for all of us here at Diversity Trust Limited, Apex Capital, because we're going to be rolling out some M3 assets for platforms. And so we're looking for individuals to make certain submissions through arbitration so we can do just that. But in order for us to be effective, we have to know exactly, or at least have a game plan, an outline, or what needs to be done. Now, I've given about 9 courses, specific courses in compliance officer training. And there are going to be additional courses, but this is going to be high-end information. Like today's class is going to be really in the high end of what's there. Before I go into the high end, I do want to ask, give the students an opportunity to ask questions for what they learn in the field as far as applicability, so we can start talking about certain things and targeting certain things. Like, for example, in today's course, we will be discussing the outline for insurance premium financing with arbitration clause and waiver premium clause. This is a very high upper level outline that I'm going to be going over. So if you have a basic understanding of insurance, then you won't get lost when we talk about insurance premium financing utilizing arbitrations and the waiver premium. If you're a little wobbly with this is your opportunity to get on the right side of clearing up certain things so you don't get lost in the presentation. But this is going to be today's subject. insurance premium financing with arbitration clause and waiver of premium clause. Uh, the asymmetric information that's being provided is really the private sector taking their ideas and intellectual property and having it insured. And then those that deal with symmetric information, such as controlled information, being able to have that reinsured. So understanding insurance premium financing with arbitration clauses and the waiver of premium clause is going to be very, very important. I also want to touch briefly with those of you that are in the Banking in the Box platform about enrolling into the syntactical trust proponent of this, because with this new AI technology that's being used, it is going to be to your advantage to get your hands on a certain level of materials, to know how to put in the proper prompts and commands to get the results that you're looking for. Because trust me, without these commands and prompts, you're swinging left and right in the dark and hitting nothing. But let's start from the beginning. So let's see who may have some questions. Anything that we've gone over up until this point, some information that everybody can kind of utilize. Let's see here. I think I got Miss Monique on here. I think I just seen her hand raised. Did I just see her hand raised? Let's see. Maybe I did. Let me just make sure. Did she have a question? Yes.
Oh, look, I can unmute myself.
Beautiful.
Ooh.
There you go. Go ahead. Talk to me. Talk to me.
Let's make this a whole conversation. Okay.
All right.
When you say, you know, I have a burning question on my brain.
Uh-huh.
When you sent out the reference or the solicitation regarding doing 98 numbers and
right.
something else.
Uh-huh.
I might want to need your assistance in the 98 number.
Gotcha. Okay.
I don't know if that's a totally different process than what's applicable now in the website. And I know we had this conversation. That's why I told you I was in Pat's files looking for the process. There's a whole document that's called the process.
Right.
That talks about 98 numbers. But are we going to have some assistance in writing up these trusts? Because
yes,
I can see what all of us, just a few of us that are in class right now, Dr. Bay, needing the multiple trusts in order to make the moves.
Right. So the answer to the question, yes, you're definitely going to be receiving instructions on writing the trust. The ability to effectively author the trust, at least from a fundamental standpoint, is going to be key. This is why I'm pushing everybody to use certain tools to be able to get the framework, the drafts in place, to be able to understand the actual framework and flow. I'm actually, as we speak, I'm writing, with that 15 trust structure, I'm actually doing that with the remaining 90 other trusts. So I will have a schematic put together that goes from the first 15 all the way to the additional 90 in different combinations. So that'll help with, how to orchestrate a certain framework. Now, it's sort of like this. Once you have, fundamentally, if you can read the 15 trust structure and follow it, then from there, everything else is just critiquing it to work a particular situation. The different types of trust bring forth different levels of protections and privacies. Also liabilities, equities, it breaks. So each combination has its own perks, if you will. So it's just a matter of just knowing which perks are most desirable by the Board of Trustees.
And one of the things that you pointed out in those perks is building the complex trust structure allows you to put into place any liquidation or collateralization that needs to occur. You can add, let's say, those vendors as beneficiaries to one of those multiple trusts.
Correct.
In order to get them taken care of.
Correct.
Yeah?
Correct. It's literally learning that the prospective trusts all can work in unison when you have gone through that veil of being called a complex trust. Your actions in commerce are going to determine whether you are truly a complex trust. The ability to say, unequivocally, this is a perfected trust because here are the board of trustees, these are the settlers, this is what the trustees are doing on behalf of the beneficiaries, because a trust is actually a three-party agreement. So when you're orchestrating everything, and I run into this as well. It's just that I work with so many different trusts, it becomes easier when I take myself out of it and look at the beneficiaries that are affiliated with each one of the trusts. Looking at the trust, you have to know that my job with authoring the trust a certain type way is that if I'm saying this is a complex trust, I shouldn't have to say it. You should be able to look at the infrastructure. Just look at the trust minutes, and you can tell whether it's simple or complex. And it gets, so to help everybody out, because this is a question that you haven't really asked yet, but it will come up. Well, Mr. Bay, I want to do all these things in trust. I don't think I have enough fiduciaries. And it's not necessarily that you don't have enough fiduciaries. It's just you haven't identified all the players in what you're trying to do. Like, if you are dealing with Bank of America and you have an active checking account personally, an active savings accounts personally, and then in the same bank with that same Social Security number, you also have an EIN attached to that same Social Security number where you have a business checking account, a business savings account. In your head, you're thinking that because you're you, and I know what, you guys know what I mean when I say you're you. I'll give you an even better example. Close your eyes and envision the picture of a clock where there's 12 o'clock there's the number 12 at the top of the clock. South of 12 o'clock, there's 6 o'clock. There's a 6. East of that particular 12, there's going to be a 3, and west of that 3 is going to be a 9. If you can see that type of clock in your head, asymmetric information teaches you when you look at that clock to see what time it is. Notice I'm going to say this. Symmetric information, be real clear for the recording, for those of you that will get the recording. Symmetric information teaches you how to look at a clock and determine what time it is. Now let me tell you what symmetric information does. If you take every number on that clock, and we're going to start with the number 12. You're going to circle 12. Why? Because that's imperative. That's the secret. If you take 1 and add it to 2, you're going to come up with 3. So that 1 and 2 at the top of the clock is significant. Now every other number descending, meaning going down from 12, and we can start, since most of you are from Western civilization, you've studied Western civics and things of that sort, we're going to go from left to right. Every descending number going down the clock from left to right, you're going to write the number, draw a line or a bracket, however you want to do it, and place the number in the right, on the right of it. So you'll have 11 on the left side, draw a line, and then you'll have the number 1 on the right side. And if you add those numbers up, you're going to get what? 12. If you go down in the sin to 10 and 2, you add those numbers up, you're going to get 12. If you get 9 and 3, you're going to get 12. If you get 8 and 4, you're going to get 12. If you get 7 and 5, you're going to get 12. Now, when you come to north and south, 12 is equally distributed. So it's 6 and 6. That's where you get the 12. Now, because you reach the bottom part, the lowest part of that descent. Now going back up, if you add those numbers going in the same direction or any other direction, you're going to get the same number 12. For example, now if you go from 5 to 7, what's 5 plus 7? 12. What's 4 plus 8? 12. What's 3 plus 9? 12. What's 2 plus 10? 12. And now when you get back to the 11, you're back at 1 plus 11. Asymmetric information teaches you what those numbers represent. Symmetric information just simply tells you or teaches you how to tell time. And 99% of most individuals that are operating in commerce are in this construct of time. That's a mental construct based in control. So, you have to know, because see, the technology age is ushering the age of knowledge. The age of technology ushers in the age of knowledge. And this knowledge is only going to be privy to the ones that understand what I just explained when it came to the concept of time, what you refer to as a clock. And if you can see those images that I'm talking about in your mind, when you now listen and look and study this information, what you're going to realize is that they have to give you the answer to the question in the questions that they're asking, because it's not necessarily what they're saying, it's what they're not saying. It's not necessarily what they're asking, it's what they're not asking for. Substance is sovereign. And in the world of natural law, God's law, the greater always has influence over the lesser. So substance always creates form. But when you don't understand that, you're searching for somebody else's form. Because until you stop being wayward in your thinking, when you go from faith and trust and move into fruition, meaning to know, you'll get into this this asymmetric information. You'll see it. They'll give it to you. See, on the clock, they gave you the answer, which was 12. That's why you got 12 disciples, 12 zodiacs. When they talk about the Holy Trinity, it's really the one and the two. They've always given you the answer. Tesla said it best. If you master the numbers 3, 6, and 9, these are the keys to the universe. This information is what has worked its way into Uniform Commercial Code, Uniform Trust Code, all the way down to your ability to create M3 assets from substance and allow it to create derivatives that can be used throughout the system that we're talking about. Once you understand the accounting, because yes, you're going to have to, and my brother Sharif Ali, Trust Christian, had a very insightful Sunday service that he released, which really talks about, well, what does my minutes need to look like? And I give you a clue how detailed they need to be. Most good trust minutes usually consist of 159 pages. And this is where it hurts a lot of trustees who aren't really used to doing a lot of detail. Do I really need to have that much detail, Mr. Bay, in my minutes? And that's kind of a loaded question, because the less detail, I should be able to look at what you're doing and know whether or not you're in a complex trust. If I can't, then you need to have enough detail where, we know what's going on. Let me give you an example. You decide that you're going to hire a lawyer to be one of your successor trustees or part of your board of trustees. And this lawyer, who has a law degree knows procedures. If you put on natural law as your foundation, and substance gives way to form, substance creates form. And there's two law forms that govern commerce. There is the law of the land, and there's the law of the sea. Which law from natural law do you think is superior? The law of the land or the law of the high seas? Now, some of you guys should go ahead.
You saying the law? Which one is natural?
Which one in the aspect of natural law has more potency? The law of the land or the law of the sea?
The law of the sea.
Okay, now if the law of the sea is more potent, my question to you is why?
Because it's average. I mean, because it's international.
That's one way of looking at it, but I want you to dig deep here because that type of response is too vague.
Okay. Let me see. Let me say, why would it be more potent?
Right.
Because for one, is I mean, for me, it's founded, you know what I'm saying, in contract. It's admiralty.
Right. And so when we're talking about commerce,
Commerce.
Right. So in the aspect of the superior law in commerce, admiralty is going to be the prerequisite. So it's maritime. So here's what you got to remember. The law of the land is the law of civilians. The law firm, civil law, is based in the law of the land, the civilians that dwell on the land. It's based in traditions and customs. Listen to me real carefully. They call this territory the territory of the United States, correct?
Right.
What is the language on this land? Since this is the United States, what language is the predominant language of the United States?
There isn't one.
Let's be clear. The language that you speak, the language that you're taught when you go to public school in this territory, what is that dialect? What?
English.
The King's English. So if you are speaking the King's English, do you understand the customs and traditions of the kings and or queens of England that you are mimicking when you act, speak, and roam this land?
No.
If you don't know, then that means the information that you have about the very words you're using is on a very shakeable, it's not even stable. What you're saying and what you think is happening, you're putting your own perpetual curses on you because you do not know the origin of the words that you're using. You're unfamiliar with the customs and traditions of England. You don't understand. Now, again, I'm simply saying that to draw reference to, in commerce, the land that you stand, this United States of America, they use terms, colorable terms, like the President of the United States, which technically does not exist because there's no President of the United States of America because America is on 3 different landmass, minimally. And there isn't a president that's over all 3. This is a corporate term. The land that you're standing in has given natural law to legal fictions and corporations because the people stopped being sovereign a long time ago when they all started speaking the kings and queens language. You follow me? Now, you have a concept, a condition in the mind that when someone says, I am going to pay X, Y, and Z. 500 years ago, if you were going to pay with something, it was based upon your what? Your sweat, your equity, your labor. You couldn't pay a debt with a debt. You listen to me, Q. You had to pay it with substance. And if all you brought to the table, if you didn't bring gold and silver, was your labor, then that means you had to work, your wife had to work, your kids had to work until that debt was what? Paid. Your labor. So the law on this land is rooted in whatever language is being disseminated on this land. Let me give you an example. If you've ever been to places like California or New York, and I'm using these two territories as an example, where they have in these designated states segregated areas like Chinatown. If you ever go to Chinatown in California, and whatever province you're in that area, when you look at the banks and stores, what language is those stores and banks and commerces in Chinatown? Is Chinese. It? Okay. So that means that language that's used in that territory is whatever they speak, that's the language that they use on that landmass. Now, when you go around the corner and they start talking everything else, that's what applies. But when you bend that corner, you're in Chinatown, it's what they say that go. See how powerful that is? When you don't understand that, and we now step into, because admiralty is what? Contracts. You're in a contract that you don't know what part of the contract you're liable for, what part of the contract you have equity in, and because you're speaking a foreign language, the words that you're using may not necessarily mean what you think they mean. You have to understand that when Christianity was introduced, it was first introduced not to free man, but to enslave the masses. See, understand, before Christianity was introduced, there was a whole bunch of other religions that were here. Christianity became what everybody could come up under. You follow me? Like, in America, in this territory that we call America, this is one of the only territories on the globe that what they deem is a commercial crime, you can get a commercial license to do. So what they're saying in commerce is, well, according to natural law, if you want to go and sell pharmaceuticals, you can acquire a license. And because you're speaking the King's English, if you render to Caesar what is Caesar's, then God can render, everything else will balance out. You see how that works? That's how they justify what they do. They took civics out of the school system. So if they took civics out of the symmetric school system, you have no idea what history is going with the law that you supposedly are standing in. Now, this is why corporately, this is how our lesson is going to start. Corporately, I only get to talk about everybody and everything in the aspect of commerce because of accounting, equity, liabilities, and assets. Only there I can talk about everything in a proper perspective and help everyone with their perception of how they restore their estate, how you manage your estate. Because everybody has an estate. It's not an estate that somebody's got to give you. You already have it. It's how you're valuing it and how you're using it on the land. And the flip side of that is, if you think it's too cumbersome, they gave you a watered down educational system now where it's okay to let somebody else be responsible for you, your children, this, that, and so forth. They've created a whole environment where it's okay to let somebody else be responsible. In trusteeship, you learn that you got to be fully responsible for everyone and everything. Your trust minutes, we're going to get into this week. We're in the 5th month of this year. That's 52 weeks in a year. At the 5th month of this year, if you articulate in your minutes the things that are detrimental to commerce when it deals with the law of the land and also the law of admiralty, it shouldn't be hard for you to come up with over 159 pages of minutes. That sounds like a lot of pages till you're double spacing. Some of these pages don't have any print on it because you're authoring a what? A book. And only the author can testify to the validity of the book. Your trust minutes has to, in my opinion, need to be a book, especially what's getting ready to happen in the next few days. Everybody who is not operating in a certain capacity, they're going to take this asymmetric information and they're going to have you testify against your own estate. They're going to have you put on misnomers that's going to make you uninheritable. The name that you use when it comes to trust, in my professional opinion, it should tie you back to the land. For those that are taking that route. Now, others may be taking a different route to restore their estate. I'm talking about those that have, for example, I'm going to use my walk. When I implemented my first endeavor with lawful legal money, there was a public debt that was given to my biological mother because her husband, who she was married to, had ran up a public debt that exceeded his insurance on a job that he had for over 20 years. When my mother, my biological mother, was faced with that public obligation, I had to take asymmetric information on her behalf. I had to create a constructional trust, a constructive trust. I had to utilize an implied trust mechanism. I had to perfect a bonded promissory note. I had to put all these things in a certain level of capacity to be able to have equity. And I had to leverage that equity to extinguish that public debt. Now, it took 90 days for that transaction to complete itself. Because debt isn't debt till it's been on the book for 90 days. Now, this was during a time where we had debit cards and, all the stuff that we pretty much got today in the aspect of, maybe we got a little bit more today than we had back then. But, we had a lot of the tools that we had now. And symmetrically, everyone who did not understand asymmetric information was given all kind of roadblocks on why you can't do this. You can't do that. They're always in the public. They're always going to tell you when you're in the public what you can't do. But what I also was hearing and trust is what I could do, because they said as a 14th Amendment citizen, as this, as, okay, so if I'm not that, then that gave me the ability to do certain things. Case in point of why I'm using this tone and perspective is to demonstrate that your remedies are going to come off the very cuff of the situation that you're dealing with. They're going to give you just enough symmetric information to cloak the asymmetric information because of the language. And the only way that language you can interpret it, like if in order for you to understand what the clock really means, you're going to have to write the number 12 at the top of your paper. And then you're going to have to go down the clock from starting with the left to the right. And you're going to have to write on the left-hand side 11, then you're going to draw a slash, and then on the right-hand side you write 11. And then you're going to put an equals. 11 plus 1 is 12. You got to see that they gave you the answer in the very beginning. And they're giving you all these different ways to say 12. In English, it's a bastardized language where they have to say the remedy in a way where if you're smart enough, you'll use it. If you're not, you're going to be governed by it. Because most individuals that are here in this territory, the law of the land is that most people have been taught to be word-controlled people. Certain words you can say to individuals will make them love you. In the same energy, certain words you will say to certain people will make them hate you. And love and hate actually is being disseminated by the words that's being used. In the aspect of making this information applicable, you have to go another layer. You got to go past the words that are being used to understanding, however you want to lay it out, the substance of what's being done. What is the purpose? What is the substance of operating in trust? What is a fundamental, if someone, a lawyer, was to ask you, why exactly are you operating in trust? What would be your response? What is the purpose? What is the purpose of operating inside of a trust? What is your purpose?
What trust are you speaking of, sir?
That's that part. Like let's kind of go in. Let's say you had hired the trust, hired the potential trustee to administer certain duties on behalf of the trust, and then this attorney or future fiduciary asked, that particular question. What would be your response? If he's being brought into it, remember he's being brought in, he still has his accolades on the wall. He's still from that symmetric mind state. How would you respond to that question?
For privacy.
Okay, beautiful. Somebody else give me another example besides privacy that you would use. Give me another. What would be another response besides privacy?
Control.
Okay. Of course, when you slide into control, you're going to have to kind of maybe explain control. So you guys are getting the gist of it. Good. The key is understanding that.
Control everything.
Go ahead.
To own nothing and control everything.
Beautiful. That part. Explaining what you're doing in such a way where it gives enough clarity is going to be key. Sometimes you have to know when to be vague and to be very detailed. Literally understanding that the way commerce operates is tethered to principles of accounting. And there's one set of accounting that's connotative. There's another set of accounting that's denotative. And let me give you the example. Accounting concepts, is that connotative or denotative?
Connotative.
Okay, is accounting conventions, are they connotative or denotative?
Denotative.
Okay, so if you're dealing with the laws of the land and you want to be denotative, and the law of the land has to be rooted in customs and traditions, how would you explain what you're doing in the aspect of trust? And I'm gonna give you what you're using, because you got to be able to spell out the accounting principle behind what you're doing. You're in trust, operating in a commercial transaction that's governed in accounting conventions, and you are using the laws of the land that pertain to the accounting conventions rooted in traditions and customs. What accounting method would that be? Because see, if you hadn't read that first couple of chapters in the accounting manual, you probably have no idea about the accounting convention.
That's the Hague Convention.
Okay,
30.
Okay, Hague Convention 30. Beautiful. Somebody is paying attention. Okay, give me another convention that you just recently discovered when we was talking about trust. There's another convention that you learn about. Which one? The New York Convention. Say that again.
Give you the power to arbitrate.
Right.
HJR 192.
There you go. There you go. See, they paying attention. The students are paying attention. See, those conventions, the New York Convention, HJR 192, the Hague Convention 30, That's how you will respond to an entity or individual who is questioning your intentions. But you got to articulate it, in that capacity. Not knowing that information, they're going to presume that you are what they presume you are. Remember, the practitioner, they're practicing. They're practicing law. And the only reason why they get away with practicing law is because nobody came competently before the Magi, in a certain capacity. So he gets to now be the referee, the judge. Give me some examples of benefits of arbitrating versus litigating. Give me an advantage.
Say that again.
What is the advantage of arbitrating a scenario, a dispute, a trust dispute versus litigating a trust dispute?
It's control the narrative.
It's more cost effective and quicker.
Okay. Beautiful. So if you are always in commerce engaged into some type of trust, and there's over 90 different types of trust, wouldn't it be feasible for you as the competent fiduciary, if no one has established the type of trust that's being used, you're being in the capacity to articulate a particular type of trust scenario that is applicable to the situation? Like, let's be clear. If they're saying we're doing this, that, and the other, and there was an application, it was a registration, a certification, and there was an offer, consideration, acceptance, and signatures under the penalty of perjury, there's a trust agreement. And since they didn't acknowledge that, can't you start spelling out who's who? If you're the competent fiduciary engaged into that transaction?
Yes.
Right, you're the one who can.
Right.
Yes.
So as a compliance officer, as you can tell from just this short dialogue I've had with you guys, there are a lot of things that a compliance officer is able to do because he or she is the only one that can act in a full liability capacity. Everything else in the public is designed for limited liability. That's why they are on the reinsurance side. And if you're fully liable, you're on the insurance side. What do you think has the most equity? Insurance or reinsurance?
Insurance.
There you go. This is why if the fiduciaries are all insured and then they want to collectively do something publicly, everybody just pledges a certain percentage of their equity to get that reinsurance in the public. It's sort of like this. Symmetric information has you go to the bank, and then if you meet their lending requirements, the bank will approve your loan application.
Right.
If you understand asymmetric information, the fiduciaries will pledge a position of their equity into a fund of funds, and then also put that collective fund of funds into a position where it can be what? Reinsured by the user and charge a filing fee.
Okay, question.
Yes.
Pause, right? So is that where, so that's a situation where, let's say this is an acquisition, right?
Correct.
And you were talking about the seller pledging 14% of their equity.
Correct.
And with the ability of the new entity that is doing the acquisition can then reinsure the business.
Correct.
And repartition the debt onto the new the company that's acquiring on their books. Is that correct?
That's correct. That is correct. Now what I'm finna give to you, so if you guys are taking notes, because see, this is an advanced subject matter, so I hope for the ones that are not in the Banking in the Box platform, I hope you're taking real good notes. Those of you that are in the platform, this is being recorded in that space. Can't put it in both spaces, so that's unfortunately where we're at. So for everybody who's taking notes, I want you to listen to how I'm going to explain this in conjunction with what Miss Fleming has explained, because I'm finna now lean into premium financing. An additional option to getting that acquisition finance would be for the compliance officer to orchestrate a premium financing scheme. And I'm using the word premium financing scheme for those of you that are writing notes. You can entitle this premium insurance or premium financing scheme. Now I'm going to go into some details about premium financing. And I'm going to hope you have some questions. The first thing I want you to understand is, what is insurance premium financing? Insurance premium financing is a financial arrangement that enables individuals or businesses to pay their insurance premiums in installments rather than making a lump sum payment up front. It provides a means for policyholders to manage their cash flow and budget effectively by spreading out the cost of insurance over a period of time. So, insurance premium financing in this example could be this way. You have commercial insurance that technically runs $2,500 a month for about $15 million of insurance. Could someone technically take their calculator and sum up $2,500 times 12? $2,500 times 12. Could someone for the class articulate, unmute yourself, and give us the total sum for $2,500 in premium for a 12-month period? How much?
30,000.
30,000 for 2,500, like 2,500 times 12.
Yes.
And that's how. That's how much?
30,000.
Okay. All right. So now, if that is your 12-month premium, you're now going to execute an insurance premium financing scheme to cover the $30,000 cost for this $15 million insurance premium. I mean, for this insurance cost. In other words, to control $15 million is going to cost you $30,000 a year. And you're looking for an option. You're looking for an option to finance this 30 grand. Now, for those of you who have been studying the material and the compliance officer training, could one of you guys elaborate on a potential structure that could be used to finance this 30 grand?
We can just go with 1% of the value.
What's 1% of $30,000?
3,000.
All right.
No. 300.
All right. So one fiduciary could elect to leverage an additional surety. So remember, we're already in one insurance policy. Notice how I'm saying this. You're already in a policy that's been issued, and the premiums are $2,500 a month for $15 million of insurance. And now that you have gotten the contract, the insurance has been issued, you're trying to implement an insurance premium financing scheme. The cost of that implementation would be how much if you're going with a 1% structure?
$300.
Okay. $300. All right. Now, I want you guys to build on this. How do you leverage this position to get this premium cost observed not by one, but multiple members? So let's look at this. How many times could 300 go into 2,500?
Seven times.
7 times. Now, if 7 individuals all raised $300, listen to how I'm saying it.
Like 8 in the 30.
Right. If 7 individuals raised $300, couldn't you cover this insurance premium financing scheme that you're putting together for $15 million in equity?
You said it's 7 individuals. Say that again.
7 individuals who are willing to pledge, who are willing to issue, who are willing to hold. Like, you can get very creative in how it implements. We're just going to talk the numbers. 7 individuals committing to applying $300 towards this $15 million covers your scheme. You only need 1% to make it work. Now, who gets the bigger rate of return would be the person who is putting the most, or how you guys say it, who's got the most skin in the game. Whoever has the most skin in the game is going to get a higher rate of return. So the fiduciary who covers the how much a year? 30 grand, he's getting a bigger equity off the 15. You follow me? Now, his exit strategy is to micromanage it to get 7 to do what? 3. Who do you think has the big? This is how you determine markets. Now, if you were the guy or gal who looks at the 30 grand a year and say, "Oh, that's doable," the potential clients you want to solicit this $15 million to are going to be who? Other business owners, other franchise owners, other individuals that have general liability insurance. If you're on the small end of this scheme, you're looking for individuals that got what? Car insurance, homeowners insurance. You follow me? They got smaller insurances that can be what? Pooled together. Those are going to be your ideal clients for the $300 scheme. Business owners are going to be your ideal structure for the $30,000 a year scheme. Is everybody following what I'm saying?
Yes.
Yeah.
Okay.
Yeah.
All right. So this is the first phase of insurance premium financing. But the entire outline is called insurance premium financing with arbitration clauses and waiver of premium clauses. Let's talk about now the purpose of implementing an arbitration clause and waiver of premium clause. See, the process of insurance premium financing typically involves a third-party lender or a finance company that pays the insurance premiums on behalf of the policy holder. The policy holder then repays the loan amount to the lender in installments, usually with interest and fees added. I'm going to say this again slowly. The process of insurance premium financing typically involves a third-party lender or a financing company that pays the insurance premium on behalf of the policyholders. Let's put a pin in that. If someone needs to have their insurance in order for them to operate in the logistics space such as trucking, and you were willing to pledge equity to cover their payments, what might you take in exchange for taking up those payments? What would be something that you would take in exchange?
Equity in the company.
Equity in the company. Let's get real, because you're skating around the obvious. The truck is being what? Insured, right?
Right.
Wouldn't you have them sign a lien?
Yes.
In the truck? There you go.
I do a UCC on the truck.
There you go. Because if they do a UCC on the truck, you can give them an M3 asset and pay up their insurance. Now watch this. Correct. If you want to save them money, you give them a reduced rate. They was paying $2,500 for insurance. You might take it down to $1,800. Get it?
Do a 1099 on it.
There you go. Who is not following what we're talking about? If everybody's following, keep listening. The next objective is to induce the 1% filing fee for implementation. And that's a matter of the market. The 1% could be offered to that entrepreneur who is putting his or her scheme in place to cover the $30,000 a year cost. So is $30,000 a lot of, let's look at it. If you took 30 grand,
Cacique.
Beautiful, beautiful. If you took $30,000, and that's what it took a year to control a $15 million policy, what might you do to secure a 10% rate of return? Let's say the client is all down for it, but they are looking for a 10% rate of return. You're going to control a $15 million policy. It's going to cost you 30 grand a year. What might you do as a compliance officer to sweeten the deal and give the potential investor, because at this point we're sliding into being, this person being an investor, how would you ensure that rate of return of 10% that they're seeking?
TCU.
Grace and peace.
Peace and love, big bro. Talk to me.
I only caught half of that. I don't want to.
Got you. You don't want to interrupt the wisdom. I'm with you. Okay, so somebody would use a TCU. Give me an example of something else that you would use. The investor, he's interested in putting $30,000 down on a $15 million asset, but he wants a 10% rate of return.
May I try?
Okay, so someone said they would pledge a TCU. Any other suggestions? Again, this is a think tank. I want everybody thinking of ways to entice the potential client and or investor into this scenario.
An arbitration clause.
An arbitration clause that allows what?
That allows the hypothecation of the life insurance that I pledged and indexed to guarantee a return of 10% backed by insurance with a performance bond.
Beautiful. That's one way. That's one way. That's a beautiful way of doing it. Beautiful. The key is insurance on one end, reinsurance on the other end. You can get very strategic. The more you learn about the different types of insurances and the ability to monetize and hypothecate, you can come up with all kinds of scenarios and or remedies to meet that 10% request. Remember, it's about knowing what insurance premium financing is and understanding the purpose of implementing an arbitration clause and or waiver of premium clause to help facilitate that structure. Let me give you the bird's eye view. Let's talk about the obvious things, the reasons why you want to do this. Number one is to cover administration costs. See, primary objectives of inducing a 1% financing fee is to help cover administrative expenses associated with managing insurance premium financing arrangements. The fee can contribute to the cost involved in processing applications, managing accounts, providing ongoing customer support. Number two, you can also ensure financial viability by implementing a filing fee by implementing a filing fee. The insurance premium finance providers can ensure the financial viability and sustainability of their operations. It helps offset costs occurred in facilitating installment payments, managing loan agreements, and administrating the overall financing process. Number three, it can be used to maintain competitive terms. This filing fee can enable insurance premium financing providers to offer competitive terms and interest rate to policyholders. Who would not want to invest in a policy of $15 million where they can receive either monthly, and I'm being generous, either monthly or yearly, a 10% rate of return? Sounds very lucrative. By generating additional revenue through the fee, providers can allocate resources to enhance their services, investing in technology, maintaining attractive financing options for customers. Number 4, using this strategy can actually improve service quality. The revenue generated from the filing fee can be utilized to enhance overall service quality, customer service experience associated with the insurance premium financing. This includes the investing in customer service support systems, technology, infrastructure, streamlined processing, leading to faster application processing and improved communications. Also, to promote transparency, align cost and benefits, support long-term sustainability. Also invest in compliance and risk management. You can also use to facilitate continuous improvements. Implementing a 1% financing fee requires careful consideration and communications with policyholders to ensure transparency and understanding. It's important to comply with applicable regulations and disclose the fee clearly in the terms of conditions of insurance when dealing with premium financing agreements. Now we're going to come to the second phase. We're now going to give an overview of the insurance premium financing overview. We've already defined what insurance premium financing is. We also determined the importance of the financial premium financing, but I now want to get into the high points. A few months ago, I gave you guys a plan of action. We're going to call it the 2022/2023 CD/MTN program. It spelled out various different players and their positions and so forth. I want you, in your infinite wisdom, to refer back to that document and perfect a strategy of premium financing, because since the insurance has to be paid for, there is a lucrative way to leverage insurances from one scenario into a different scenario or a reinsurance scenario. I'm going to go one step further. We have implemented an agreement with Go Capital where if you are the loan officer who is generating the loan, there's an arbitration clause attached to your contract with Go Capital to be a loan officer. So if they don't meet certain requirements, but you're willing through arbitration to perfect such a scenario as the one we're discussing in this particular class, you will create a viable product for the underwriting department at Go Capital to finance, or since we're talking about premium finance, $15 million. It's going to cost how much a year? At $2,500 a month? How much is that a year?
$30,000.
Okay, and if you got a $30,000, it's got to be absorbed into the cost per year, and you got a 5-year loan. 30,000 times 5 is how much?
$150,000.
So if we do this right, he is only going to lend a certain amount, but by you implementing this strategy, he's going to gain another $150,000 in what? Equity, because of the contract you wrote. It's going to be financed inside the deal. So his paper is going to have an additional $150,000 worth of value because the 1% was factored into the loan.
And that's the fees, right?
Right.
Got it. Mm-hmm.
Now,
and then you would.
Mm-hmm.
you would do a UCC to perfect the security interest
In the proceeds.
Correct.
of your lender to
Mm-hmm.
sweeten the deal,
Right.
so that they have the proper substantiation. Yeah.
Right. So let's take the bird's eye view. You get the application into the queue. They tell you it can be financed if you bring certain things to the table. You implement this premium financing structure. The deal is approved. Now, upon approval, the client is going to receive his loan proceeds within 24 to 48 hours. The commission for the loan that you generate is going to be issued 30 days after approval by the company, minus the fees that you agreed to on the contract. Because in Go Capital eyes, they want at least the first month's premium collected before they issue a commission. As the
Mm-hmm.
loan officer who generated this scenario, the deal is already in the bag, your client has already been funded. What might you do in lieu of receiving your commission? You're the fiduciary who put this in motion. You got income that's coming to you from this loan, and I'm going to give you the commission. On $15 million that you lend, we're going to say the commission on that is, because you're making, okay, on $150,000 you're making 15 grand. So let's just say for laughs and giggles, your commission is $175,000. Now, this loan technically has been funded, it's been approved, it's been funded. You're waiting that 30-day gauntlet for your commission of 175 grand. You're the fiduciary who did noting and minuting in arbitration. Give me a scenario that what you might do in lieu of this 175 grand in commission returning to the estate. Let's see if you're thinking. Or let me give you one. How would you leverage this 175 grand that's going to come in 30 to 40 days?
Assign.
Yeah.
Okay. Assign it to who?
UCC3. Whoever you choose.
Okay. Give me, you know, you got this 175 grand coming. What would you use it for? That's what I'm getting at. So I'm looking for examples.
A REIT. Assign it to a REIT.
Okay. You apply your future commission to fund a REIT.
Mm-hmm.
Okay. So I want you to so think it out now. If you're talking about a REIT, you're buying real estate, right?
Right.
How much real estate would you buy with 175 grand in commission?
Go buy another insurance policy.
Ooh, say it again. Say it again.
I'm gonna go buy another insurance policy.
All right. What did the first policy cost you?
Go buy two.
30,000.
It cost you 30,000. Right.
30,000 for the year.
Right.
14.
You just turn around. Do that 2 or 3 times.
2 or 3 times, right?
I'm just seeing if you guys are thinking. There you go. So if you run this thing the right way, now I'm gonna give you an oldie but goodie. A while back, when some of you guys first met me, y'all heard me give this example about C.D. Latteran. Who remember the C.D. Latteran speech?
I do.
Okay. Yep. What if you took that 175 and you want to create an additional 15 million in capital? See, what you guys are thinking about is right. I don't want you to just continue to understand that everything is applicable when you're thinking in this asymmetric proponent. Now, remember, private certificates of deposit, they can mature in what? A month? Remember, the commission ain't going to close until what? You ain't going to get your commission until 30 days, right? So you can have the CD mature in what? 30 days. Listen to how this go now. If you close on the loan and you're not going to get your commission to 30 days after the fact, you don't have to wait 30 days to go into action and buy some real estate. You just got to reinsure it in a different vehicle. Isn't a CD an M3 asset?
Correct.
Okay. Brother Cacique, when you worked at Wells Fargo, were they doing CD collateralized loans when you were there? I don't know if he's still with us. Brother Cacique, can you hear me? I ought to bring you back on, big bro. You might have to unmute yourself. See if you can unmute yourself, if you can hear me. Case in point, I'm gonna put it in the ether. Let's say, how many CDs would you need to turn 175 into $15 million? Let me give you an example so you don't get lost in the sauce. What's 175 times 2?
350.
350?
Yeah.
Okay, so what's 350 times 2?
700.
Okay. So the first one is going to go 350, and then the first one's going to go 350. The second one is going to be 700. So let's count it out. We need to get 15 mil. So 300, 700. We're going to say 350, 700, 1.4, 2.8. What is this? 5.2, 5.6? What is that? 5.2?
5.6.
5.6? All right, so we're at 5, we're at 5.6. And then at 6, we're at 10.4, right? At 7, we're at 20.8. So you only need 7 CDs to cover that $15 million capitalization. You only need 7 instances to take $175,000 commission that won't mature until 30 days. Will it take 30 days for you to get your hands on 7 CDs? If you're the one creating the CDs?
No, you get one of them there 24 to 48 hours.
Remember, I'm talking about private CDs. We know in some instances the public, they have CDs also. I'm saying it's a fiduciary that's creating commercial paper. You're taking your commission, you're authoring a private certificate of deposit. And you're going to take that value and you're going to double it. Now, I'm going to give you the speech again because everybody might not be clear on how the CD process works. Here's what it looks like. When you go inside of a bank, you're going to ask the banker, do you guys offer CDs? They're going to say, of course we do. Say, here's another question. Do you offer CD collateralized loans? They say, well, yes, we do. He said, now here's my third question. Can I apply the interest off of the CD towards the interest of my loan? And if they say yes to all three, then this is how it's going to look. We're going to do it with $1,000. You're going to walk into this bank with $1,000, and you're going to buy a $1,000 CD. When you acquire the CD, while you're in the bank, you're going to take, all right, so follow the move. You walked in the bank with $1,000 in cash. You gave the banker your $1,000 in cash. In exchange, he gave you a $1,000 CD. While you're in the bank, you're going to go to the loan department. You're going to fill out an application. And after you fill out the application for the loan, you're going to then give him your CD that you just got from the CD guy in the bank. He's going to make a copy of the front and back of the CD and give you back the original $1,000 CD. He made a copy of it. Then he's going to cut you a cashier's check for $1,000. When you walk out of the bank, you got your $1,000 original CD that was monetized, but you still got the original, and you're going to have in your possession a $1,000 cashier's check. You're going to deposit both of those into a money market account. The original CD for $1,000 and the $1,000 cashier's check, which is a total asset of what? $2,000.
Yeah, 2,000.
And then you're going to go back to another trust and repeat the process. Now remember, that's how CD laddering works. Now you're going to be doing this privately, but instead of you going to the banks, you're going to create trusts. So let's talk about it. You got 15 trusts, right? You only need 7. Which 7 are you going to use to monetize that 175 acquisition? Or let's be clear, that 175 in unearned revenue, that's in the form of a commission check that happens to be tied to a private certificate of deposit. Who doesn't understand what I just explained?
You just say it one more time, bro.
Man, I'm scared. Can you just say it one more time? Yeah, for real. I was writing feverishly.
Okay.
You see how you slid that in, man?
let's try.
Can I answer?
Yeah,
Can I say something for you?
Go ahead. Go ahead, big bro.
What I think he said was, that's our own personal accounting.
Right.
Because the 175, that's on our books that we're dealing with Go Capital with. So
right.
That 175 that's due to us, that's unearned revenue, but
right.
we can use that today.
Correct.
Is that what you're saying?
That's exactly what I'm saying. If you are a loan officer with Go Capital and you implement a structure, and again, I use the original example to show you, to expound on everybody's thinking, to show you what you're dealing with. Not to say everybody's thinking is wrong. I'm just challenging you to think. I want you to think inside of this perspective space. When someone said, with this commission, I'm going to buy more insurance, that's the right type of thinking. Now, you can acquire, don't disengage or disenfranchise what I just said. Add to what you just said, this strategy with the CD laddering, because you can ladder insurance.
The insurance policy is a CD, a certificate of you can make it a certificate.
You can make it that when you package it the right way.
Do arbitration.
That's what arbitration is for. You gotta, when you go through arbitration to make what we're talking about come to fruition. Let's bake the cake. Here's the ingredients. You're gonna need first, after arbitration, a what? A transmittal letter. Those are the instructions. Then in the middle of that, after you get the letter, you're going to have what? All your UCC filings, your 1s, your 3s, and your 5s. 5s representing the letter of credit. Then after you got all your filings there, you're going to have what? That surety bond. Now, when you put all that together, it's ready to be handed off to the next fiduciary. That's the package. That's what you're monetizing. That's the CD. Let's break it down.
Question.
Go ahead.
So you said after the arbitration judgment.
Right.
Then you complete your UCCs and file them, right?
Right.
Once they're approved with their numbers, then you are able to move that into, and I missed that part.
Right. Once you have got your filings, you're ready for implementation. Now, implementation in your space, your job is to create the M3 asset. It's not your job to make it liquid, but you got to attach with it a mechanism where it can be made liquid into a 2 and a 1. But it's not your responsibility. You just got to make sure it's what? Insured.
So at that point, you would utilize the next trust.
Right.
Make the first trust the trustee of the next trust.
Right.
And pay.
Go ahead.
Do 1, 3, and 5 to the trust.
Right.
You're gonna create a
Right.
contract, an application.
Right.
The other trust can do an application with the other trust.
This is why
Right.
This is why you got to remember loans aren't income, but they can be leveraged. And if you do this right, you already got a mechanism. Use Go Capital to bring forth capital to the other side in the public, because that's what they're there to do. Just give them a surety to do it, and stand back and let everybody work the magic, because they're all tied to themselves.
Right.
Mm-hmm.
So when you now we're going to add to the, we're going to put the icing on the cake. You're going to put the CD laddering mechanism as a mechanism for monetization and hypothecation. You're going to literally going to use how you would ladder CDs in the public. You're just going to do the exact same mechanism, trust to trust.
Mm-hmm. Mm-hmm.
And you only need 7 trusts that has at least 175K in equity to create 15 million in equity.
So you say in
Why you put me out there?
So
That I had to pay for.
Bro, we're just having a friendly, trusty conversation, big brother. That's all we're doing.
We don't mean no harm, pirate.
Oh, I am no pirate. I'm a privateer.
Okay, there you go.
Privateer. Yes,
there's a-
I stand corrected.
The pirate
Yes.
Got you.
Time to buy a trust agreement.
Right. Proper trust
Right.
agreement. Proper trust agreement.
agreement. Yeah, that's where we're at.
So literally you're perfecting it by understanding the synergy between the structures. Symmetric information is what everybody who has attended a public school platform, that's what they have been indoctrinated with. It's not bad, it's not good, it's required for insurance purposes. I'm saying it that way so when you say it, you won't offend nobody. I understand that the information you have has been disseminated for insurance purposes. See, that don't sound like you better than everybody else, right? That don't make nobody feel a certain type way when you say it that way.
Right.
You know, when the lawyers get their panties all in the bunch and they gonna start saying what they're saying, you respond with, "I understand." Why you're saying this for insurance purposes. I get that. See, it's not what you do. It's not what you say, it's what you do that determines who you are. They're going to say certain things because their job is to always tell the public what they can't do. They've all been indoctrinated to tell you what you can't do. Why? Because of it, for insurance purposes. Think about it. If we didn't have this symmetric information, right? Think about it. Would insurance be as lucrative as it is right now if we didn't have this asymmetric information? Like, kind of think about it this way. If you live in a country where everything that is deemed illegal you can get a license to do, And in the terms of accounting, when somebody says something is legal or illegal, legal simply means taxable, illegal means non-taxable. What does that do to risk management when you understand that from that perspective? We'll go here. Right.
That gives you foresight almost.
Well, let's go here. When they introduced the game of Monopoly, it was called the landlord's game. And it was designed to see where symmetric information kicked in and where asymmetric information could be implemented. Because at that time, 1933 was when the whole financial crash came down. 1936, I think, is when the game Monopoly came out. Between 1936 and 1939. So shortly after the Wall Street crash was when the landlord's game worked its way into the homes of the average quote-unquote American. This was a social experiment. Now, if you have played Monopoly or actually still to this day have board games your kids have played and you might own in your closet a Monopoly board game. If you played this game and you remember if you last time you played whether you did well or didn't, well, let's just say for laughs and giggles. If you played Monopoly and all the money ran out and y'all was at the end of the game counting the money and see who had the most money and that's who won, I don't think you read the instructions. Because the instructions of Monopoly said that when the paper money runs out, you're supposed to pull out a piece of paper and a pencil and keep the game going. See, symmetric information will have it sound like this. The wealthy and the elite, they're always telling those that are not wealthy and non-elite to save money. Did you hear that? Wealthy and elite individuals are telling you who are not wealthy and the elite to save. Are they saving the same way you're saving?
Absolutely not.
The reason why is because when they say save your money, as long as it's in the bank, it ain't yours. It's theirs. They don't have to save. Your concept was controlled. When you look at the clock, you see the 12, you see the 1, the 2, the 3, and so forth. And you never understand everything on that clock is a 1 and a 2, a 12, or a 3, however you want to look at it. Again, if you look at the clock in your mind, and then you descend from 12, you go to the left of that clock, you're going to see the number 11. And then to the right of that clock, directly across, directly adjacent to 11, you're going to see the number 1. What is 11 plus 1?
12 all day.
Okay. What is 10 plus 2?
12 all day.
9 plus 3.
12 all day.
8 plus 4.
12 all day.
So you understand, if you didn't learn how to read a clock that way, that's part of the problem. They sold you a concept of time. How many hours they say is in a day?
24.
Apply that same methodology and you'll be surprised. You'll be surprised. It's no coincidence that the symbol for double bookkeeping entry is the same symbol as the cross that the Christians use. That's not coincidence. The symbol for double book entry accounting is a cross. And the symbol for Christianity is the cross. And that
all my have been paced by the great of the offended master.
That was not by coincidence.
So is that the whole mirroring concept,
Yeah.
which is why we have a straw?
Yes, they had to literally think about it as a mirror. Individuals who stare at a mirror become infatuated with the reflection. You know, and then in commerce, here's what you're attempting to do. If you're staring at the reflection in the mirror and you hold up the right hand, the mirror is always holding up the what? If you're holding up the right hand, the reflection is holding up the left. This is universal. Whenever you are staring, wherever you are looking, whenever you are searching, whatever is done on one side, there's an equal and opposite on the other side. To solve the mathematical equation of solution, you're trying to figure out, well, how do I have the reflection hold up the same hand that I'm holding? As long as you are staring at that mirror and you're holding up the right hand, it will always hold up the left. There's only one thing you can do which will allow that reflection to do what you're doing, and that is turn your back to it. You can't turn your back until you know what you're looking at. In commerce, they only get you to look at the reflection and interpret from that which way you want to go. So let's make this applicable. You're staring at the mirror and you want the left hand in the reflection to be held up. What does that mean you got to do in the so-called real world? If you want the left hand to go up, you got to hold up what?
Right.
All right. Now, that means you got to know that if you want something to happen in one direction, you got to act in a what? Different direction. Because to know one, you got to see that the other exists and vice versa. To control the reflection, you have to be able to be confident in what you're doing and turn your back. Because when you're turning your back, you don't need to see it. You know that it's going to follow wherever you're going. So when you turn your back to the mirror, when you hold up the right hand, that's what the reflection is doing. You don't see it because you know it. Watch this though. If I'm watching it, I'll see it. See, if I'm a witness, I'm a spectator, I'm speculating, I'm witnessing perfection. You got to know perfection. They have created an environment where you're studying things, saying things, without understanding the law of the land and the law of commerce that are governing it. And you're wondering why you're getting the reactions that you're getting. That's a huge part of it. All right, it's question time. It's question time. All right, for everybody who's listening, does anybody have any questions up until this point?
That analogy just blew my wig.
I love cognitive dissonance. How I love it.
It's the order of the day. It is the order of the day. I'll use this and I'll use this analogy a little bit further. I'm gonna put everybody on mute so everybody can hear me, and you can unmute yourself if need be.
All participants are muted.
In order for you to create synergy, you have to be willing to be fully responsible in a construct that forces the masses to have limited liability. That's their power. Your sovereignty rests in your ability to be fully responsible. If you want to be sovereign, take on the cloak of being fully responsible. That's a key prerequisite of sovereignty. Commerce is like the mirror. For everyone who isn't moving in the appropriate position, they're going to get an opposite reaction. See, individuals that want to say, well, I own, they have actually in their mind associated ownership with control. But in commerce, if that was true, you would be having elodial title. You would be acting a certain type of way. But remember, the body goes where the mind is. You don't want control. You want ownership. Just like those that holds the gold makes the rules. So if you own the gold, physically held it in your possession, you made your own rules. You could either put it in their bank if you trusted them that way, or you could put it in your own vault. It was when everybody was deduced to being equal, the same. You live in a world of diversity. Look at just go outside and look at all the diversity in life around you. From the various different types of trees, plants, insects, all of those things. These things are very, very, very diverse. So in a world of diversity, you have been commercially conditioned to think equality without fruition. So the equality that you're willing to accept is the author upon which is giving you that reality. Who's controlling the narrative? In the 80s, you were told, we'll give you cash for your gold, which is almost saying, we'll take your worthy, bright and shiny substance and we'll give you paper. Now, I think 500 years ago, you couldn't get people that actually had real gold to give it up for paper with people's faces on it. Now, again, I didn't say the Templars didn't play a part in convincing everybody that's the way to go. I'm just simply saying, if you knew what gold really was, and somebody came along, Johnny come lately, and said, hey, give me your gold and I'll give you this paper. That was conditioning. Because, see, you knew that all blood, sweat, and tears that you used to get that gold, how it came into your family, all the stories and lives that precious metal took, that wasn't easily going to be done away with a lesser substance. I'm going to show you the simplicity of things that have elodial value versus things that don't. How is it that on a periodic table, you have the periodic table for gold, whatever that is. You have the periodic table symbol for silver, whatever that is. Let me give you a more plentiful element that's on the planet that everybody have heard what it's made of. Have you ever heard the element called H2O? Now, for those of you that have heard of H2O, how come we know what the recipe, but we ain't made it yet? How could you know what something is made of, but can't put the ingredients yourself and make it? You're talking about making a cash machine. Man, if I can create a machine that could create H2O, you've heard the saying, money don't grow on trees, right? We say, what if it is? It's called apples and oranges. Who told you money don't grow on trees? Oh, the same people that told you to stand under the square, right? You know, all these graduations that we went to, nobody was graduating above the square. You know, they attended this symmetric ritual under the square. Commerce is governed by the law of the high seas. And the law of the land today is regulated by those that are master law merchants who practice the laws of the high sea based upon the traditions and customs of the land. But when you're in a land where people are stateless, they have no true origin of self, they're going around calling themselves colors. That's how they identify themselves. I have a black car, I have a light-skinned girlfriend, and I got a yellow dog. These things have a tendency to send a different algorithm and frequency among the lands and the high seas. And there isn't any substance in casting pearls among the swine. And nobody gets any kudo points for for any of that. Capital goes where it's being rewarded. It flees where it's being punished. In order for us to be the change we want to see, the only thing we can control is what we have possession of. I don't think trusts were designed to break up families. I think trusts had a much more deeper purpose in uniting, creating new families, if you will. That key word, trust, it is so impactful. Yet, it's one of the elusive things. I'm going to share with you something that my big brother Sharif Ali shared with us earlier today in the aspect of trust minutes. And when you listen to this, it should enlighten you. It should bring some clarity. Before I jump into that, though, you guys are in lecture mode. Press 9-4. I'll bring you on if you got any questions. If you don't, I'm finna jump into what my big brother Sharif dropped on us in Sunday session. Does anybody have any questions, comments, or concerns, or anything we discussed up until this point? I think I got some questions. Let's see what I got here. What's in the chat? Equity, equality versus... There you go. Can we discuss the difference in, as many do not know, use these two? Beautiful. Let's see. Of course we can. Big brother Kasik, unmute yourself. I got you, big bro. Talk to me.
How are you, beloved?
All right, all right.
I'm just tired of seeing politicians mix the two, so I want to make sure they don't follow the herd into the pit of fire.
Right, right. Let's discuss it from a political standpoint. In your opinion, what do usually most politicians who decide to throw their hat in the ring, what is this? I ain't gonna say ritual they go through. I don't want to use such a strong word. What does their special purpose vehicle looks like in your opinion when they step into the arena?
They have a blind trust.
Blind trust. Okay, from a banker perspective, explain what a blind trust is.
They put the money in a trust. They don't know nothing, and they give full discretion to whoever the trustee is until they leave office.
Gotcha. Seems like a pretty crafty way of, because again, you're going to be a public official. You're going to be handling all these different things in the level of influence. So assets that need to be placed in a certain level of control are placed into a blind trust. So technically, his decision making isn't supposed to be influenced by what he may or may not have. So could this also be a mechanism to protect and create privacy of what they personally held prior to office or what they may acquire as a result
of? Yes, but this is typically used to protect the assets that they already have outside. Mm-hmm. Now, to make sure they're able to transition the campaigns, it's a three-card shot Monte game, going from the trust, the blind trust, mm-hmm. and now this blind trustee sets up a political action committee, mm-hmm. and then turns that into a super PAC, mm-hmm. By way of the election with the IRS, and the law says that he can't talk to him. So he's controlling the money. He can't talk to him. Now he has all of it in one pot.
Roger that. So through the power of suggestion, good old NDAs, and good old the good old IRS provides the perfect mechanism for privacy and protection because there are rules in place to keep one from circumventing into the other.
Absolutely. And the crazy thing is, it says blind, but don't take it the word literally, because the Federal Election Commission say they could do this on the Political Action Committee, and you can be business partners, and it's not called colluding. You just can't talk about the campaign or what.
Right. This is very powerful because in the aspect of understanding these different scenarios, it is clear that in a properly constructed blind trust, the trust regs and declarations and bylaws, in that opinion, would have to be pretty thorough and very, comprehensive in order for this to be accomplished. It seems like for conversation purposes, it would be almost to one's advantage to really look at the fact that information can be disseminated a lot of different ways or not disseminated if they author it a certain type of way. What is your experience with blind trust in your, from your heydays in dealing with the bank?
I've seen a kill switch. Oh, it was a poison pill.
Okay, gotcha.
So it's a poison pill that if any parts of the trust becomes public for any reason, purpose, the trust is null and void and begins an automatic transfer to a secondary trust that's already been funded and awaiting that payment.
Beautiful. Yeah. So I've seen quite a few contingencies that way where this message will self-destruct. Those type of mechanisms in place when things get a little too scary on the other side. Almost like a parachute clause, if you will. I've noticed in the early days of the parachute clauses. I've seen a lot of those in the early days of the bank mergers where they got a bright-eyed, bushy-tailed, Harvard, Yale graduate, fresh out of college, impeccable record. They got this billion-dollar company that went from $1 million to $1 billion overnight, and some individuals are feeling a little not nauseous, but they're like, okay, this is the part of the ride where we get off now. And so they bring in this bright and shiny CFO who's going to be the person that everybody gives praises to when the stock is doing great, but when it tanks, he's going to be the person in the news that's saying, well, you did this bad. And his whole ordeal is that pay me handsomely with this key man, and as long as I don't go to prison, I'm your guy. And it was very strategic because I watched numerous occasions where this group of bad actors would come along and recruit young talent, and that's kind of how the wash and rinse and repeat thing went. So it's interesting that you made mention of a kill switch or a poison pill scenario because I've seen quite a few of those in my day also. Any aspect of what's getting ready to happen with his Fed Now accounts and the implication of states and or territories not wanting to fully comply with central banking digital currency. Do you think we're going to see more blind trust or less blind trust?
It's inevitable you see more. People are knocking at the door to get in the private side.
All right. That makes sense.
But Kasich is a player privateer.
Right.
The game is sold, not told.
Right. I understand. Beautiful. Oh man, this is going to be awesome. Look, what's your thoughts on equality versus equity?
the mirror you talked about.
Mm-hmm.
Equality is when you're looking at the mirror. Equity is when you're looking away.
Well put. Well put. Well put. It is the ever evolving perspective that commerce is fluent, and you have to understand that if you put your best foot forward, so to speak, and control the narrative, you know, you become the most valuable person in the game, and you won't make yourself obsolete. And there's certain things that you can do, or there's certain things you don't have to do based upon the position that you're in. Charitable remainder trusts are exempt from taxable income. I wrote a whole list of terms that we came up with last week. I got about 120 terms. I'm just now getting to the first 20 of them. And I noticed that symmetric information that I'm seeing circumvent into the public narrative, for some reason, corporate-owned life insurance, Keyman Insurance, they're talked about in the public very differently than what they are. Can you concur with that, or you might have a different take on that?
The public don't know they exist, beloved.
Right. Right. So, not knowing that something doesn't exist doesn't negate the fact that it does. Not to add insult to injury, if the doctor told you that you got gout and you need to take this medicine, and you didn't do any research, you just took the doctor's word that you got gout, and then somebody who actually really does have gout, you and him get into a conversation about the symptoms, and you realize that what he's talking about and what you're suffering is two different things. Then you go see another doctor to get a second opinion, and he come to find out part of your ailments is the medications you was prescribed. You didn't have gout. You really was taking something you had no business taking. Do you think that might be a lot of the problems that's going on in commerce, dealing with the general population in that regard?
You switched it up. It's not even just the general population. They've dumbed down even the people at the bank. So I recently went to go pay homage to my former manager who trained me in the bank. And I brought the token snacks that I used to bring them every time I was late.
Right.
And do you know that before they open a trust and or a business account now, they're sending it to an attorney, and they made the manager open the account. When I was in the bank, he did nothing except for drink his coffee and have his meeting.
Right.
So now they've got a new level of general population who they don't even understand the difference between a certificate of trust and an incorporated registration with the company.
Oh, I'm glad you brought that up. I've recently dealt with a fiduciary. Now, we have a fiduciary that's over the age of 50 that works in the Secretary of State here in Tallahassee. But 99% of the fiduciaries are all under the age of, and no knock to young people, they're under the age of 35, under the age of 40, we'll say it that way. And so these young individuals have, now check this out. The database in Jacksonville allows you to create a judgment certificate within 24 hours if you make your submission before 2 p.m. How do I know? Because I've done this on numerous occasions. Because they didn't put an application inside of the portal, these young people, when you call them, have no idea what a judgment certificate is. speak to someone that's at the Secretary of State building, and it's like, oh yeah, you just go here, point here, click there, there it is. So,
Love it.
yes.
I got worse. It gets worse than that.
I can believe it.
Clerk in Cobb County.
Mm-hmm.
They did not know what an amicus curiae brief was.
Okay, yeah. But that, again,
he sat there and told me, "Ooh, I've been here a year. I've never seen that one before."
Right. So it just demonstrates the level. So these professionals, I had a very interesting conversation over the holiday about too many chiefs, not enough Indians. And
I haven't met one single individual Indian yet, beloved. I'm still searching.
Too many chiefs, not enough Indians. And it's like, what happens when, again, if the youngins are not even taught how to endorse a contract because they're not taught manuscript anymore, then I'm really looking at this AI. I love the AI because it helps me conduct business faster. I see it as a tool. I know I'm going to have to critique it and manage it and control the information that it disseminates. But I can critique the language. It's a language model. So this is not legal advice. When I implement a document, I'm teaching the AI to speak in legalese from a perspective that works in certain spaces. And what I'm finding is, wow, okay. If you don't know about legalese, if you don't know this asymmetric information, and you just tell the AI to do something, what is it basing it off of? Doing what? And what variable? What language? What style? What is the references?
Which dictionary do I use?
Right. So it's like if you don't have a predetermined perception of things, I see us doing a whole lot more business in arbitration. A whole lot more. I am literally, I'm loving the opportunity, but there's just not enough.
I love it. That is the most politically correct way to say it. I'm happy for this fuck shit that's about to happen.
Right, I'm trying to say it the right way, but
I'm a privateer. Arr, there she goes.
Right. What's about to happen in June? I can't wait. Unfortunately and fortunately, I can't wait. I can't wait because.
Oh, me neither, beloved. I've been prepping for this since 2012.
Yes,
when I saw what we did with the bailout money in the bank. That's when I started planning my exit.
Right. There's a lot of stuff floating, so it's interesting. Like my lender with Go Capital is salivating at the fact that he can control a surety bond for 1%. I kind of open my mouth not too fast, but I kind of, I get excited real quick. So it was more or less the information that was spoken of was literally. Hold on for a second here. I see. Okay, yeah, they're checking my. Yes. Okay. I got excited, and so what I made mention that this is technically what the fiduciaries and compliance officers are bringing to the table. He goes into his warehouse line and he says, "Well, okay, what is the average transaction?" And I said, "Well, that's kind of hard to determine because arbitration awards vary based upon the scenario. If we're going to call it a dollar amount, we're going to say the minimum claim is 50, maximum is about 5 million." Now, I understood why he was asking. I I went on to the next question. You know, in other words, I'm already ready for the next question, but he was fathering. Okay, this insurance costs less than his general liability. And having the ability to hold money transmittal bonds and sureties and reconvey them, he really wants to do policy loans. But you understand the conflict. The loan officers can do policy loans. You know, the loan officer has a contract arbitrarily with the company. So the conversation was kind of going, well, how do I make this work in a larger algorithm? Which, you know, I'm gonna hold off until the last minute to kind of tell him what he's asking me for. But it just was amazing that with a warehouse line where they're lending on commercial transactions on average about $750 to $2 million on average, he became very excited about spending only 1% for to acquire a surety bond. I'm in some very deep conversations, and so it's just interesting, very interesting. When you worked in the bank, did they do a lot of CD collateralized loans when you were there?
I was the king of CD collateral loans. I was top 3% in all the country when it came to lending and credit. So that's how I built up. That's how I built up. So they put me in the middle of the hood. So I literally edified the hood, and everybody got good credit. I don't care what they did with the money. So essentially, I had people coming back with the CD, right?
Right.
The money's there. We're refinancing collateral CD loans.
Right.
To give you more money.
What was the minimum amount you guys were using to open the CDs? Did you have a minimum maximum to open a CD?
Yes. So we did it at 2 levels.
Mm-hmm.
I ran this program with the credit cards.
Mm-hmm.
That was minimum was 300, maximum was 100,000.
Gotcha.
CDs. Before I got my license, maximum was 100,000. After I got my license, heaven opened up.
Mm-hmm.
And there was no limit. I actually was when I got my license, they gave me the medallion stamp. I was Alpha Z, which means I could stamp 2.5 million without any other approval.
Right.
So I was going crazy.
We got a fiduciary that's here in Sarasota that's doing the super jumbos, and we're in a lot of dialogue about these potential spaces that are getting ready to be implemented. So this will definitely be.
I'm putting myself in the middle of that, but I'm not going after fresh. I'm going for the 180-day refis because I have a partner who's going to back me up and then refi that into a long term.
Gotcha. So there's 6 months on the paper, then you can definitely work with them.
I just need 6 months on the paper.
Right. Okay. We need to talk. I got a couple of things we can definitely put in that space. A couple of things. But definitely. Hey, big bro, look. You know what? You just finished out the rest of my content. So this is what I'm going to do, guys. I want you guys to go to WTDTAradio.caster. You will hear in its entirety the Sunday session that Sharif Ali is going to be speaking on. He's going to break down the 159-page trust minutes. And I promise you, if you listen on enough, you definitely will learn something, man. Before we jump out of here, bro, and anyone else that may have any questions, what do you foresee going into June? More conventional loans, less conventional loans?
Can I go first?
Sure, go ahead.
I'm about to tap into an 80 billion fund that they set up. The federal home system is giving all the thrift institutions 80 billion
Mm-hmm.
because last housing crisis was the thrifts that revitalized the economy.
Right. Hmm.
So it's going to be a quick fall, but the money's already been in place to buy everything back up.
Right. So to someone that's preferably in a situation, let's say they have a loan that may fall into an assumable position, like the exit strategy is, another man's trash, another man's treasure. They're over their head, they want an exit strategy, the mortgage is assumable. What would you recommend for that?
Come to me and I'll assume it.
Hey, won't we all, big bro? I want to get it on the recording. I simply want the students that are in the banking box to hear it from one who knows. The key, there's
I'm not throwing money away.
Right, I'm with you.
I'm gonna turn that 3 ways, baby.
I'm with you.
I'm gonna find a way to pay that debt. Bring me all the debt.
Right.
Let me figure out how to reconcile.
There you go. Definitely that. Oh man, it's always a pleasure. Hey guys, before we jump out, any questions, comments, or concerns, press 9-4. You may be able to unmute yourself, but if you can't, press 9-4 on the keypad so I can bring you on before we go to WTDTA Radio Caster for the Trust Minutes. Any questions? Any questions, comments, concerns? Any question? Okay, you guys are good. All right, if you're good.
Wait.
Mm-hmm.
Wait. I need to tell you something.
Go ahead.
The company I set up to help the assumption,
Mm-hmm.
it's set up as a not-for-profit. So if anyone's in trouble, they need to assume. Essentially, they can start renting it, and we're able to subsidize it because I can get credit for whatever they don't pay is considered a donation to the entity.
Roger that. Yeah, we definitely need to talk. I got a couple of commercial guys that definitely ready to rock and roll. Hold on for 1 second. I think we got Miss Monique that's got a question for me before I jump out of here. Miss Fleming, talk to me. If you can unmute yourself, talk to me.
Oh, okay. Kasik, so if we need to refi to get it into a mortgage-backed security for the DRIP purposes, we can bring clients to you, yeah?
Call me. We'll speak privately.
Okay, perfect. And my other question was, I haven't looked in the Colorado Uniform Trust Codes, but is it necessary to register your trust with your state?
Here's what I'm gonna say. Is it necessary to register the trust with the state? If we're talking about a REIT that's going to be handling what exactly? Give me what are they going to be holding in terms of res?
Let's say it's a REIT.
Okay, it's a REIT, and are we wanting to hold commercial leases that are going to be redistributed? Or are we simply monetizing fund of funds? Like, the short answer is, if we're going to repetition mortgages and offer dividends reinvestment plans, keyword private placement memoranda.
Got it.
If you use that, then it's just a matter of how you want to be regulated. If you don't use private placement memoranda, then maybe a letter of understanding could work. So it really depends upon what do you want to be regulated by with the REIT.
Got it. Okay.
All right.
That makes sense.
But we can discuss it and make it more applicable. We just got to know, have a place to point it. But that'll work. All right. Go ahead.
What's the difference between the trust agreement and the trust bylaws.
Okay, trust agreement, trust bylaws. Think about the bylaws like the bylaws of the company. You know, the rules of the road that govern the officers of the trust that's in question. The trust agreement is what the trust is in agreement with between the trustees, settlers, and or fiduciary duties on behalf of the beneficiaries. So one is going to be the rules for everybody and the agreement of the trustee, settler on behalf of the beneficiaries. You can get very strategic in both, but this is the basic premise for one versus the other. When you go into your trust manual, they get very specific with certain cases. So, in your trust manual, and just reach out to me. I will tell you preferably which case and which page to look up in your trust manual. That'll give you real good examples of such.
Okay, perfect. Thank you.
Alrighty. Any other questions, comments, or concerns before we jump up out of here? If you do, please press 9-4 on your keypad. Alright, I'm looking. I don't have any other questions. With that, I'm gonna say, look, this is not the end, this is the beginning. Definitely if you want to get with me to put these things in place, please give me a call at our new number, which I had to issue a new number. Funny story. Student told me, Mr. Bay, when did you hire a Mexican lady to answer the phone? So we had to change the number. Somehow, I don't know how the office number ended up working that way, but